mean, so the share price decline, kind of significant, or a bit more than you might expect given the EPS beat.
Yeah, so essentially, Nike's going to be a victim of its own success. They hit revenue that was in line with consensus, but still, there was a little bit of elevated expectations beyond consensus going into the print, just because Foot Locker had such a great quarter a couple of weeks ago. End of the day, Nike's putting up low double-digit revenue growth, and they set initial expectations for high single-digit revenue growth next year in fiscal 2020. That's in line with their long-term plan. And if you can name another consumer company that's growing at those levels, it's really difficult. You just talked about Tiffany earlier missing on the top line. Nike hit on the top line, and not only did they hit their numbers are multiples of what everybody else in the retail industry is growing today.
And the margin impressed you as well?
Yeah, so the margin was actually a positive surprise. So on the gross margin side, Nike came in up 130 basis points. We were initially looking for something around 70 basis points. So there was a beat there, and that actually is a testament to a lot of Nike's longer-term supply chain investments, initiatives, et cetera. So we do think we're a little bit more optimistic on the supply chain on the gross margin line going forward. That's where the beat came from on EPS. So a couple of pennies there. Again, Nike beat on EPS. Revenue was in line. You can't really poke holes in this story. And as you look to 2020, a lot of new product. That product's coming in with higher average unit or lower average unit costs. So we expect gross margin to continue to beat. We expect the revenue to continue to drive forward. And we actually think initial expectations for next year are quite conservative.
But Matthew, can people poke holes in the valuation?
Yeah, that's what people try to do. But poking holes in valuation of Nike at 30 times forward when they're, again, growing faster than practically any other retail company or any brand out there, it's really hard to do because what else are you going to buy? I mean, you could buy Abercrombie & Fitch. You could buy Tiffany, right? And Tiffany's likely going to be down today. I'd much rather buy Nike at a 30-time valuation multiple than buy a retailer or consumer brand that just hasn't proven that they're relevant in retail world today.
And did we get any updates on some of those shoes you mentioned to us yesterday that have been released in the first quarter on the call? Yeah, we did. They talked about the 720, the Air Max 720. They talked very highly about that. They talked about a wide range of product. They talked about the Adapt, which I know we discussed extensively yesterday. But one thing that they talked about a lot, and Joe, you'll probably appreciate this since you were just talking about pants, they talked a lot about apparel. Nike is going heavy into apparel. They see a huge opportunity to expand in athletic apparel and not just sell workout gear, which is typically what they've sold in the past, but sell product that you wear Monday to Friday. That's an opportunity that's well larger than the athletic footwear industry in itself, and Nike's one of the few companies that's addressing it.
Hey, Matthew, it's been a while, the whole Kaepernick thing. Is there any residual effect to that, either positive or negative, in North American sales that we can read into any of these results, or is it ancient history already?
Yeah, it's funny. With the news cycle, it's ancient history at this day. Okay. We did an analysis on that, and while people were very either positive or negative on Kaepernick at the time that event happened, what you've seen, at least by now analyzing Twitter feedback, et cetera, is that Nike's brand view is now kind of just back to what it was before the Kaepernick incident. So, it's people are excited about Nike. The sales would indicate that there's been no impact whatsoever. End of the day, non-event.